everyone. Welcome to Wharton Tech Toks. I'm your host, Manasi, and today we're joined by Emily Bennett. Emily is a principal at Owl VC, the largest venture capital firm focused on education technology globally. Owl has $2 billion in assets under management and invests across early, growth, and late-stage opportunities in the area. Prior to joining Owl, Emily was a product marketing manager for news integrity at Facebook and a product manager at the New York Times. Emily received her MBA from the Harvard Business School and her bachelor's from Middlebury College. Emily, thanks so much for joining us today.
Thanks for having me.
Great. So you've had an incredibly successful and inspiring career. Would love to go back a little bit to your pre-MBA roots. Would love to hear a little bit about your product marketing manager and product management roles at Facebook and Spotify, and hear a little bit about your highlights from that experience.
Yeah, I'll give a little more color around my track and then can talk more explicitly around the two roles, how they're different, and how they've kind of funneled into my current life. I really stumbled into tech after Middlebury. I had majored in psychology with the real bent around neuroscience, and first job out of college happened to be in tech, which brought me to San Francisco, but transitioned over to Facebook, where I initially was working on Instagram, on search and explore and direct messaging experiences. But I was really, from an early stage in my career, pursuing the intersection between kind of business viability and what I saw as more altruistic intent within the constructs of companies. So I joined the social good team at Facebook. We were working on everything from fundraising on the behalf of nonprofits and personal causes to launching Safety Check, which was our response to initially natural disasters, but then eventually human disasters, acts of terrorism, to enable people to seek network and aid in times of crisis. Moved to New York and became PM of Video at the New York Times, where really was working on digital proliferation. How do you incentivize it for a legacy publisher for whom it isn't table stakes? And how do you think about incorporation of digital formats in that medium? And then the 2016 election happened in the US, which we all remember very well. But it was a real time of both change and an increased accountability at the platform level. This was also in the midst of Cambridge Analytica, but Facebook was really put up in the public eye for, I'd say, the most exponential moment as someone that had really been a player in the dissemination of misinformation. And so was recruited back in that lens where I worked on efforts around misinformation, both how do you identify it, how do you think about algorithmic changes to curb the distribution of it, how do you better inform consumers at scale to make better choices. As you referenced, Spotify, I am a musician while not at work. So I saw that as like the intersection between passion and career, and got to work on our artist platform, where it was really thinking about how do you incentivize distribution for a long tail of artists who are all trying to create, but really where the 1% gets access to the easiest mechanisms of distribution and monetization. So it had been kind of a myriad of career, but kind of linear track in terms of functions, both in PMM and PM. I can talk specifically about both roles. I'd say the one thing to note on PMM, it looks very different across different companies. In the lens of some of the bigger tech companies, so using Facebook as an example, there are about 4 different versions of PMM that have actually quite different functions in terms of how they fit into the organization and the types of skills that they hire for and the types of roles that those apply. I'd say like the major splits that you'd see, typically a portion of PMM that kind of runs into marketing tends to be more consumer focused, more about running brand campaigns, thinking about kind of go-to-market proliferation of concepts. And then the team that I was on, which was on the partnership side, was more kind of the consulting arm of PMM. So there it's kind of looking out at market, at competition, creating instincts around what should we build and why, and using that prescriptively to help kind of feed product, to feed roadmap, and to also feed our partner communication as we roll out new products to market. So that was the role that I was situated within at the Meta side. I'd say probably a much closer parallel to kind of core PM work than some other PMM functions, which was more of the natural progression into PM and the constructs of New York Times. And that role was very similar at Spotify. There are actually a lot of parallels in the work that I was doing at Facebook. I was dealing with an ecosystem of publishers that were all reconciling how to create viable businesses on the platform, how to ensure that their information was disseminated effectively. And Spotify was quite similar, working with an artist that some were covered by labels, some were independents, but all wanted the same thing, which was to like spread their work, spread their craft, and subside through the platform. A lot of commonalities there in terms of the core work.
Very helpful and super interesting. Specifically around the Spotify experience, what other teams were you most closely working with? I think a lot of our students here at Wharton in particular might be interested in marketing, but maybe have business development experience. Maybe they've had more partnerships and strategy experience. So curious kind of who you were typically collaborating with the most, both internally and maybe even with external entities.
I'd say there are some roles within tech companies that are inherently cross-functional. Product marketing is an example, product management is an example, partnerships is an example. There are some that are a little bit more kind of segment specific. Engineering, if you're not an engineering manager, tends to be a little bit more in its kind of own space versus transferable. But who I was working with specifically, if you're a PMM, you're going to be working directly with a product manager, with engineers. So it's more kind of the core functions of building. But then very much you're kind of transferable across segments. So also working closely with marketing on as we actually launch a product, how do we message it? What's the moment that we create? How do we think about reaching audiences? And what's the plan for actually scaling this out and getting to mass penetration? As well as depends on the function that you're kind of serving on the PMM side, but I worked quite closely with the partnership team who owned a lot of our core biz dev relationships on the publisher side, on the artist and label side, who are managing those relationships. And at the end of the day, it's really about stakeholder management, both internally and externally, getting people across the line on products, making sure that the right inputs are infused as we actually think about building. We do launch things externally, that the right messaging is landed to the right audience.
Got it. Were there any skills or tools that you felt were either surprisingly very important or you knew going into these roles that you needed to develop some expertise in? I think we hear a lot about greater use of analytics and algorithms on the marketing side, especially in regards to optimizing pricing and actually doing more customer personalization, but maybe even internally using better tools to understand your customer base at a very granular level. So curious if there were those kinds of tools you might have leveraged.
I'm very much an advocate of you learn skills on the job and you learn through doing. I didn't work on the marketing side. And so what I would say is like a lot of the analytics tools, I did think about price, but price is more involved in kind of packaging and product materialization versus like actual brand campaigns. So it's a slightly different function. But a lot of the skills, I mean, what actually matters if you're in a product function, product can be PMM, it can be PM. It's like a real strategic bent. So like strong instincts around how to get to truth on markets, how to get to truth on competition and kind of viable green space in terms of building. That comes with an instinct of like how to actually collaborate and talk to the market, which some people miss, but it's probably the most critical component in product building, is you probably have an instinct about what you think you need to build and you're probably wrong. And if you go out and you talk to the actual users, they'll be much more informative than you are kind of operating in your own bubble. And then the analytical side, each company typically operates with its own set of tools. Like at Meta, where I spent the majority of time, they had a lot of their own kind of proprietarily built data tools that you need to learn how to kind of use and manipulate. Spotify had its own set. And then if you're working at a startup, a lot of times they'll be using kind of tech tools that are off the shelf or working with external third-party providers that are less custom built. You have to, yes, learn the tools, but I think you have to come in with an instinct of like, what are the key questions that I'm looking to answer? And that's also true in investing, which is like, you could learn all the modeling that you want, but if you're just modeling without a sense of the key questions, you're really just wasting time and manipulating numbers. That's probably the through line for any function that is strategic and bent is like, what are the key questions that I need to answer and how do I answer them? And the inputs there are likely a mix of qualitative and quantitative, and you need to know the right tactics to get to truth on those questions. But the rest is learnable.
Great. Really helpful to hear. And then switching gears a little bit. So you went to Harvard for business school. Going in, what was your sense of what your ideal career looked like after? Or alternatively, was kind of the purpose to be exploratory? And I think a segue into that is also, how did you come across investing as a potential post-MBA career path?
For sure. I never thought I would go to business school. I was more akin to, I thought maybe I'd go to law school or get a PhD as a former writer. But I'd spent at that point about 6-7 years working in product adjacent functions. And I think the question that I had was, do I want to continue on this track, scale into either a head of PMM or a CPO as the goal there? Or do I want to back up and think more holistically either about ecosystems or about building something on my own and solving kind of more scrappily? I wasn't sure that I actually wanted to continue on the track of becoming a head of a product team. And partly it's because I'm somebody that's like really inspired by speed and by change, variability in my job. And I found that I was getting less and less of that the more I worked on individual products and individual teams. And so I kind of had this desire to either like work more in a silo, build something myself where I could really be the agent of change, or work more, as I said, on an ecosystem level where you could kind of be prescriptive about the next generation of companies and get to look at a lot of different concepts and ideas simultaneously. So with that hat, I applied to business school and I approached it very intentionally thinking about two tracks that I just referenced. One was, do I want to start something right now? And the second was, do I want to be an investor and what does that even mean? Because at this stage, as a reminder, like I went to Middlebury, no one really did venture capital coming out of Middlebury. There's some select players that exist in the ecosystem, but they're sparse. And I've been told several times at Meta that I'd be good at venture. And I was like, what does that even mean? But that stuck with me. That instinct of like, you'd be good at this stuck with me. And so the question I had was why? And is it a good fit for me? Which is the other side of that coin. I started out by kind of assessing if I wanted to build something. This was a period where the market was changing, the 2019 into 2020, start of COVID. My risk appetite to go out and build in that space was a little bit curbed in that period of time, understandably. But simultaneously, I started talking to a lot of venture capitalists. And what I found was like really smart people, really inspiring businesses that they were collaborating with. There were actually a lot of parallels to my former work. If you think about the nature of product, a really good product person has like strong instincts around like, what do we build and why? Being able to really solve for an acute pain point and solve it in a way that can scale and reach mass audiences. A good investor, it's quite similar. It's just you're predicting the next generation of teams and concepts. So it's like you're looking at ecosystems, thinking about what's the missing link and how do I find the right team? If there are 30 teams that are all kind of approaching this idea from slightly nuanced angles, what's the right one and what's the right angle? And that's actually hard to unlock, but that's the critical component. So that's how I approached business school, was like with the intention of those two tracks. And obviously I landed on venture.
Great. And how did you narrow down that venture capital was where you wanted to spend time thinking about the investing ecosystem? And you can kind of do growth, which straddles in between VC and late stage buyout. You can do kind of middle market buyout, late stage private equity. It sounds like maybe part of it was having that proximity to founders and management teams and also collaborating with them on that building process, but would love to learn more about that.
You also do think about like, where am I a good fit? If someone is hiring for somebody in private equity or buyout or even growth, you really want someone who has done growth before, who has done banking or private equity. Like modeling chops are incredibly important and they should be. That's not my skill set. I've learned how to model. I'm good with data analysis, but I'm never going to be the person that kind of models the fastest. I didn't spend years as an iBanker. If you want to hire for that person, you shouldn't hire me. When you should hire me is I have spent a lot of time building teams. I've spent a lot of time building early products. I have strong instincts on like the types of products that sticks, the right consumer and business experiences. And that's also what gets me going. It gets me excited. So I naturally gravitate towards early stage because that's when those key questions come up. It's like, how do we think about an MVP? How do we think about actually like assessing the right product for scale? What team do we build around it? Which are all experiences that I've had previously and able to build to a board conversation or just to any conversation with a founder. But it's also, I think, arguably where I shouldn't be hired in the other type of function because I have the wrong background for it.
Okay, makes a lot of sense. Before we get into your experience at Owl, I guess as an investor, you kind of can choose to be more of a specialist from the start, to either join a sector-focused fund or maybe join a fund where you will cover one or two sectors in particular, or maybe take a bit of a generalist model and maybe join a firm where you're going to have exposure to several areas, but you might not be concentrated in one. How did you go about thinking through that decision?
Yeah, this was a hard choice for me. I think there's value on both sides. The value of generalist is that you can really be flexible, especially in markets that are volatile, such as the current one and the one over the last couple of years. Being able to be nimble and changeable in that type of ecosystem, I think, is a huge benefit. But the value of specialization is that you really are like build disproportionate knowledge about an ecosystem. You have like the built-in advantage due to your expertise, due to seeing what works, what doesn't work, and like really building network, which can just enable you to like make better decisions with that level of depth and specificity. I had considered both. So I talked to, I'd say majority teams actually at generalist firms, and Al was the only specialist firm that I really talked to. This was like a very special period of time in edtech. 2020 was the start of COVID. What we saw there was like this rapid period of change and digital proliferation across education that I saw at that moment as, yes, there were components that were temporary in terms of surge, but the overall theme was sustaining, which was now there was this increased comfort with purchasing of digital materials and increased infusion of digital into the classroom and beyond the classroom. That was really exciting to me, this construct of like a moment in time where there's like clearly accelerating tailwinds behind a sector that are going to have long-term impact and change. And then the second thing I was looking for is like, if I was going to do specialization, I wanted to have enough breadth to really be interesting and to like help facilitate that nimble behavior that I just talked about, given market volatility. At Al, we invest in everything from kind of early learning through lifelong learning. We also invest a bit in EdTech Plus, which we see as like the adjacent sectors that intersect with education, more on like the fintech side where there's literacy components, mental health where there's coaching. And so that ability to think more holistically across the life cycle while still keeping that specialization with learning as its core was the type of complements that I was looking for. And then really, really smart team, which I'd say to anyone looking for a job, that's what matters most to me is like really good people. And I always want to be learning from the people. I never want to feel like I am the smartest person in a room. And I've always sought that throughout my career because I think that's how you continue to push yourself. And Al is just like a bunch of brilliant people. And that's what mattered to me when I was looking for a job.
Yeah, absolutely. And if I think about the edtech space, I guess you could first segment it by B2C, direct to consumer, and then maybe B2B options. And maybe some things I would put in that latter category are reskilling tools for corporations or campus management tools for schools. If Al plays in both areas, how is the focus shifted over the past few years? And where do you typically spend your time between kind of those D2C use cases and more B2B?
Yeah, I mean, we play in all areas. You can think of us as like, we're thesis driven, which is edtech as the core, but that's across all business models and go-to-market functions that work. Where we don't typically play, and this is more related to like type of return profile, and what we see as like difficulty of scaling these businesses, but like pure hardware intensive businesses, we don't spend a lot of time. And then anything that's like directly like physical services oriented or physical infrastructure oriented, so like physical schools, I'd say we don't spend a lot of time there. But within the realm of digital, we're definitely go-to-market agnostic, business model agnostic. And what we're really looking for is just like, what are the best companies in education? And what are the business models that make sense for those companies? And do they have the capacity to scale? And capacity to scale gets into like economic viability. So whenever I'm assessing a business, I am looking at like, does the unit economic model of this business make sense? Does it work as they scale? And is it going to be like retentive enough and have a good enough gross margin profile to make this something that eventually can both like scale, but also scale efficiently, which has been, I tell you, the failed point of a lot of businesses is that there's a lot of businesses that grow, but they grow with a ton of capital expenditure, which I'd say in the past 2 years, the market shifted, has been vastly exposed as inefficient. That's typically what we are looking for, regardless of business model. Where do I spend time? I think you end up spending time naturally, even if you're working at a generalist firm. You end up specializing. And you specialize because depth of knowledge, as I referenced earlier, is important and it gives you the advantage. For me, I love direct to consumer because I've done it before. And because I feel like when I walk into a room, I come in with like a real advantage of understanding the space, understanding the metrics, and being able to like get to truth on decision much faster. I'd say a lot of our direct-to-consumer deals have run through me accordingly, just based on the fact that that's my background. But I've also been involved in a number of K-12 deals and a number of B2B deals, more on the upskilling side, so flexible in that realm. Though I would say like more attracted naturally to like the flexing business model. How do you scale something really quickly? How do you make unit economics work in a direct-to-consumer format?
Got it. And kind of on that note, what are some of the biggest challenges or barriers you've seen come up in edtech deals? I covered edtech briefly at my previous firm. And I think one area we sometimes saw with more of the B2B models was if you're selling into school districts, really strong potential for large contract values and growth within the school districts. But because of the way their sales cycles operate, maybe you need to anticipate a 12-month sales cycle, or you need to anticipate a large prevalence of pilots versus immediate sales. So I'm curious if you've seen one challenge in particular emerge.
I don't think I've seen one challenge. I've seen many challenges. It's both challenges and opportunities. They come with the same side of the coin. It's really hard to sell into K-12. So if you do it well, we always talk about like defensibility in businesses, and what gives me a motive that's really hard to sell into K-12. And so your competition tends to also struggle to sell into K-12. What is challenging in K-12? Yes, length of sales cycle, being able to actually get scaled contracts and thinking about like where the budget pockets actually come from, especially given the expiration of ESSER, has, I'd say, impacted some companies more than others, but they are things that we're actively looking at. We're going into investing in a company and being able to really like justify a price point that can make TAM sizable enough for true venture returns. And there's different types of return profiles. Like I think there's some more kind of private equity style returns, which you can kind of assume a smaller multiple on initial entry price, but still kind of making a net return on. In venture, you're swinging for the fences. That's the model. To swing for the fences, you need a sizable enough TAM to make that math work. I'd say, especially in AI in K-12, we're starting to see a myriad of solutions that are scaling across that segment, but all of them are capped at pretty low price points. So about $5 a student a year, which you do the math on that, it's like 270 million TAM across all of K-12 in the US. And so there, it's hard to make that calculus work in terms of holistic value. So I'd say like the challenge is twofold. It's both like selling model, how do we get into the door? And then how do we accrue enough value to make this like a really scalable opportunity? But the backside of that coin is like, if you can figure those two things out, once you get in the door, these contracts tend to be long-term. They tend to be quite sticky. K-12 doesn't like reevaluating tools once it's in the door. And a lot of times, some of the larger contracts can be anything up for 5 to 7 years. So truly solidified. And then on the price point side, like if you can unlock it, there's evidence of really scaled businesses, several of which are in our portfolio that have reached over 100 million ARR, continuing to scale quite well across that channel. That's the major unlock if you can prove more accurate accretive value.
Really interesting. And I think one question on a lot of people's minds is, how are companies in the ed sphere utilizing better analytics, better artificial intelligence, and machine learning? So I guess whether it's within your own portfolio or in potential new deals, A, are they leveraging it either by making it part of their product portfolio or trying to partner with AI companies? And B, what are some of the use cases you're seeing? I think one we hear a little bit about is, since you can utilize machine learning to better process documents, maybe better document processing, whether it's forms that teachers are utilizing, or maybe retrieving student data in a better way. Maybe it can be used more for teaching use cases where you can actually use AI to construct short form course content for one-off skills, but wondering what else you might have seen.
Yeah, I'd bucket AI into two major areas. One is like the internal use cases, and the second is the external use cases. And external use cases are being adopted both by incumbents and new startups. So there's sub-buckets underneath that. But in terms of internal use cases, that's probably where we've spent the majority of our time as a firm, is looking across our portfolio and thinking about, for all of the companies we work with, how can they effectively use AI to streamline internal processes to do more with less? So that's where, your reference around document processing actually applies in the constructs of companies. It also has helped a lot with content creation, being able to do more with significantly less cost. We've seen significant gains there. Companies like Subject, which is buying accredited kind of digital classes for K-12 or even masterclass, which is thinking about just like setting up content at scale, but not having that be a significant burden. On the external side, it's like a couple of buckets that we're seeing emerge. I'll say first, in the lens of K-12, probably the most prevalent one has been the construct of like an AI coach, AI tutoring, especially in kind of core STEM. A lot of solutions emerging that are kind of pocket agents for the student that enable them to kind of better personalize learning, to get guidance in real time, and more like in the lens of homework help. In the classroom itself, I'd say the next bucket is probably teacher tooling. There are a couple of solutions that have started to get the lead. I'd say Magic School probably has the most scale, which is more focused on helping teachers with setting up lesson plans, curriculum, re-leveling, and eventually assessment as well. So calibrating student performance in real time. And probably the third bucket in the construct of K-12 that I'm most excited about in ways is like all of the boring stuff that you would never think about. But it's like, as an administrator, like, how do I use AI to create better efficiencies in the construct of a school? And that could be like reconciling data silos across all of the disparate tools that are used within my district or my school. That could be using AI to help like augment teachers and the efficiencies of teachers, which is a huge problem right now due to teacher hiring deficits. More focus on direct to budget linkage in terms of impact on the AI side, I think is incredibly important. And then, of course, on the B2B side, probably the majority of focus on just precision upskilling. So both helping with interviewing using AI to better assess talent, to actually remove the need to leverage a recruiter, given that you can actually automate a lot of that front end of the interview experience. And then on the precision upskilling side, better identifying each individual talent and weak spot of employees within the organization and being able to deliver much more personalized upskilling materials in the flow of work. So moving away from this construct of just generalized education materials, which has been the norm to date in L&D, towards things that are much more directly catered. Probably the best example of that within our portfolio is Workera, which is a fantastic company, founders actually out of Stanford, which is focused on exactly that, like how to better identify talent and how to think about just more effective upskilling and information diffusion that's more catered to each individual employee.
Great. And then thinking a little bit about sort of deals in the edtech space, have you noticed any shifts in the buyer universe within edtech? I feel as though naturally you have some of the large ed services, edtech players, whether it's like a Chegg or a Coursera that could be acquisitive. I've also seen that there's been some emergence of IT services or future of work players that are looking to build up their reskilling or upskilling capabilities. And so they've emerged as potential buyers. But wondering how you might see that evolve in the future as well.
Yeah, there's different ways to think about exit precedent in any segment, also in edtech. I'd say right now, it's been a challenging public market environment over the past year and a half, really maybe 2 years. And so I'd say for a lot of our companies that are at like the relative scale to be able to go public, I think there's been a little bit of reticence around that just based on the type of volatility we've been seeing in the public space. On the acquirer side, it's really about like finding the right fit and finding companies that both have either like the equity stability or the disposable cash to be able to invest and make kind of scaled acquisitions in companies. So that can come from edtech. We have seen some IT services, seen a lot of like private equity entrances looking for kind of majority buyouts and minority buyouts in the edtech space, which we see as like very viable downstream options. And then on the corporate side, larger companies that aren't even edtech specific that are looking to enter or make investments in the space. Google's a good example. Google acquired Photomath, which now has over 70 million users on the AI homework help side to augment some of their Google AI education efforts. Meta has made investments there. Teams that are talking to Microsoft and other players. So it's becoming more of like an ecosystem layer engagement as it pertains to exit pathway. But for any company, it's about like find the right synergies and the right fit and a price that matches that. That's the exit that probably like best matches to your business and its future viability. Because oftentimes like an exit isn't an endpoint for a company, it's a transition. And so you should think about it accordingly.
Yeah, absolutely. And thinking globally, are there any economies that have emerged as being more important or being more active in the edtech space? I think there's been a lot of movement in English language learning, especially in Asia. And then I remember that there were a lot of coding boot camps coming up in France and across Europe as well. So how does OWL see kind of international investment opportunities and maybe more growth there?
We think quite globally in terms of our investment. We always have, but I'd say increasingly so. For the last couple of years, we actually just opened an office in London and now have 4 team members out there that are focused on Europe as a market. Our core focus on markets, really it's around like finding the best companies, regardless of where they are in the edtech space around the world. As that pertains to like go to geo specificity and how we spend our time, I'd say definitely Europe. Within Europe are like key places that we've looked and invested in. Germany, we have a number of investments. France, UK, also actually have an investment in Denmark. So think holistically about that segment, but typically looking for like areas that have sizable enough TAM to be able to be meaningful businesses and also evidence of being able to break across country lines if that's necessary in terms of price point. We've done a number of investments in India, APNA, Class Plus, Growth Space being recent examples there. But it's a huge TAM and very burgeoning edtech market where there's significant prioritization and willingness to pay around edtech tools. Broader APAC, have made several investments there and also starting to see some examples of companies that are really achieving scale. Speak is probably the most recent one on the AI language learning side. They are doing quite well, just raised a scaled round. I'd say the trouble sometimes that we've had with broader APAC has been there's actually like great region by region specificity. If you think about kind of Japan versus Singapore, there tends to be, I'd say, some trouble in breaking outside of the specific paradigm that you're operating in. So actually expanding across different countries, being able to seed new markets. And that's quite essential as it pertains to ability to build a really viable business with a strong exit pathway. That's typically what we're looking for there is like, what's the precedent that this can become a real global player versus something that's like specific and also embedded in my individual space. And then LATAM as well, we've made several investments in LATAM, I'd say, especially in Brazil over the last couple of years. Brazil's a huge market and a market where there's both pretty stable public market, but also just significant investment in edtech. I mean, we've made an investment in Africa. ULesson is our scaled company there, a leading edtech provider actually out of Nigeria, both in high school and now moving into tertiary as well. I think Africa is a more challenging market, both because of government changeover, currency volatility, which we've seen a lot of over the last year. But it's also a market which is like ripe for change. And so part of investing as well, there's like the easy bets. US is an example of that, where like from a market perspective, there's a little bit of like risk mitigation just based on the stability that we know of companies scaling in this market. But then there's like the next generation of risk, which is like you can bet on markets like Africa catching up. And if you can be first to making some of those bets and kind of bet over the right time horizon, they could end up being really viable and fun-changing opportunities.
Super interesting. Thank you. This has been super helpful. I know our audience will appreciate your insights on both your previous career and transitioning to investing and your role at Owl. Before we end, we typically end with a couple of rapid fire fun questions. So we'll have a couple of those. To start, if you could visit any country in the world, which one would it be and why?
It's a good question. I just did my honeymoon in Japan and Thailand, which was wonderful. I'd say back at HBS before COVID started, I was supposed to go spend time in South Korea to actually do some work there. That's still on the top of my list. So I'm going to say South Korea, and sad that I didn't get to go there because the world shut down during COVID.
Yes. And then being from the Bay Area currently, what's your favorite restaurant been in San Francisco or the broader Bay?
I have a good answer to this. We love Liho Yacht Club. It's fantastic. It's Hawaiian food. And they have a very palatable price for a tasting menu if you would like it, if you're looking to eat too much food. We were just there for my birthday about a week and a half ago. It's great.
Well, happy belated, and I'll add that to my belly list.
Exactly.
If you could go back to your teenage 16-year-old self, what would you say to her?
Chill out. No, I'd say like embrace spontaneity. I think we all have these like very prescriptive concepts of like what's supposed to happen with our career. At that point, I was like, I'll probably be a doctor. But there's a lot of surprise that's baked into how you navigate a life and how you navigate a career. And that surprise, that serendipity ends up leading you to the right endpoint. So that's what I'd tell myself is like, you have no idea you're going to go to business school, but it's going to end up being the right decision for you. And it'll lead you to a career that's actually quite a good fit for your skill set.
And then aside from Tech Talks, which we hope will be one of your favorite podcasts coming out of this, do you have any go-to other podcasts or news outlets that you follow?
I'm a former New York Timeser. The Daily is my morning podcast because I love its just bent on the news and more editorial approach. So that's my push. If you want like a nice like 20-minute pocket news with a little bit of like an editorial bent, The Daily.
Perfect. Well, that brings us to the end of Rapid Fire. Thanks so much again for joining us.
Of course. Thanks so much. Good to see you again.